Hi everyone, so I'm previewing what to look out for in the week ahead in markets, and I put a particular emphasis on what's going on with the airline shares, which were doing this, then started doing this, but in the last few days have started doing this. Okay, I'll stop, but very shortly I'll give you my take on this trade and 5 other top things to watch out for this week. So I mentioned those airline trades, which have been a talking point among the professionals because these shares have been very popular, apparently, with people like us, the retail investors. And it reminded me of this cartoon that's quite famous, you may have seen it before, about the so-called professional investors and how they actually operate. Now, I don't know who made that one. Anybody who knows, drop a comment in the video, please, and I'll give it credit next time. And by the way, if the cartoon gave you a chuckle, please click that like button. It really helps us out a lot. Right, before I talk about why these airline shares have hit some turbulence, let me give you my top 5 picks from the economic calendar this week. So number 1 is China industrial production and retail sales. China's a month or so ahead of the rest of the world in reopening, so we need this data to continue picking up to keep driving the economic recovery narrative. Industrial production is supposed to have gained 5% year over year, and the decline in retail sales is expected to have slowed to just -2%. Number 2 is the Bank of Japan. It seems likely they will sit on the fence, but the yen has been rising against the dollar, which might tempt them into some sort of timetable-based forward guidance, basically the same as what the Fed just did, which would be dovish and in theory negative for the yen. Number 3 is US retail sales. So like most developed countries, the US economy is based on consumption. And so after that huge positive surprise in last month's non-farm payrolls, we need to keep the momentum going for the belief in the reopening trade to continue. Now, number 4 is the SMB. They've been intervening heavily in FX markets to defend against the franc's strength. So it works so far, and 105 is held in the Euro Swissy. Whether the SMB can match the ECB's 1.35 billion euro package at this meeting might determine if that level, that 105 level, keeps working. Now, number 5 is the Bank of England, and of course this will be a big one for the pound, especially a few days before that June EU summit. The Bank of England have been talking up negative interest rates recently, but I suspect they probably don't want to rock the boat before that summit. Now remember, you can see the full economic calendar on lcg.com, and the link will be in the video description below. Okay, we all know that the air travel has come to a standstill because of the pandemic, and a lot of these airlines just grounded their entire fleet because nobody's actually allowed to fly, or very few. So these airlines run on pretty thin margins anyway, and especially the budget airlines, and they have high fixed running costs. And so all that put together means they are particularly high risk of bankruptcy, more so than other industries at least. But let's find some reasons to be optimistic here. Internal flights are happening in China, and many European countries and on an EU-wide level are planning to open up borders and lift up those travel restrictions in time for the summer holidays. And then on top of that, some of the big airlines are getting government bailout money. So the big one was Lufthansa in Germany, and possibly soon Virgin Atlantic. Now, you know times are tough when Richard Branson has offered to put his private island Necker up as collateral on a loan. Now, these airline shares have rebounded on speculation that lifted travel restrictions will see passenger numbers jump. And then they fell back again on fears that a second wave of the virus might stop those restrictions from being lifted in the first place. And there are really good arguments for both. So I think that the key thing here is to understand that this is one of these situations where you know you're in a trade and not an investment. Because from an investment standpoint, the investment thesis is looking pretty cloudy. It's been a talking point that Warren Buffett sold all his airline shares before they all jumped. And so people have been saying he's wrong on this. I'm not saying he's definitely right, but he's a long-term investor and a pretty successful one at that. And he's looked at these airline fundamentals, things like passenger load factor, airline revenue miles, etc. And he decided it's not for him. Now, the point is, we don't know how people will behave once these restrictions are gone and how quickly they'll be willing to fly again. And until we do, the shares are likely to be very volatile. Anytime there's an up and down in the market, they're going to be up and down the most, which is what you want for trading, just not so much for investing. Right, that's it. Thank you very much for watching this week. Subscribe to LCG on Instagram and YouTube so you don't miss the next video. Good luck trading this week. Jasper signing off.